Let me guess, you'd love to buy a new house, but you gotta sell your existing home so that you can either come up with your down payment or so that you can qualify for the next loan, because let's face it, you can't qualify for both deals. Or maybe it's a combination of the two. You need your equity for the down and you can't qualify for two mortgages. And let's be real, who wants to write a contingent offer in any of these competitive markets? No one. You might as well just offer $0. The seller's not going to take your offer over somebody that's coming in with a similar price without contingencies. So what's the solution? The trade-in mortgage.
The water's warm, but it sent me shivers.
So this is a problem that most would-be move-up buyers face. Most people can't qualify for two mortgages, and most people don't have a ton of money laying around for a down payment. Most of their wealth is tied up in their home, which they need to sell so that they can get that equity, so that they can make the down payment, and so that they can be a competitive buyer and write an offer that's not contingent on the sale of the property. Well, why is this a problem? Well, because most people, they're not gonna sell their house and like rent a hotel until they find their next house. Who wants to do that? Nobody wants to move multiple times. They want a seamless, streamlined transaction where they can move from their current home to their new home. So how do you accomplish this without selling your house first? Is it even possible? Now, there is a traditional solution for this that you may have heard about called a bridge loan. And a bridge loan, although it is a solution, it's not a solution that meets most people's needs. For one, you have to be able to qualify for 3 different mortgages: your current mortgage, the bridge loan, and the mortgage on your next property. And like I said, most people can't qualify for 2 mortgages, let alone 3. And let's be real, the cost of bridge loans is atrocious. It's almost like loan shark money, which is why most consumers, when presented a bridge loan, they say, meh, I'm cool, I'll figure out another way to do this. And when it comes to iBuyers like Open Door or Lightstream, they lowball the crap out of you. You're not gonna get a full price offer from those guys, so you're leaving a ton of money on the table. So what's the solution? Introducing the trade-in mortgage from New Way Mortgage. Sellers that utilize the trade-in mortgage can secure the down payment for their next property and only have to qualify for their next property. They don't have to count their existing debt in the equation, and they can write a non-contingent offer, go out into the market, be competitive, and win. So how does it work? Through our partnership with Calc, you will receive a written binding offer to purchase your property that's good for up to 150 days. And this meets both Fannie Mae and Freddie Mac's guidelines. But here's the deal. Calc doesn't want to buy your property. They want you to go out into the open market and sell your property the traditional way, maximizing your sales price. Go ahead, keep your real estate agent involved. Calc is not trying to kick them out of the process. But by providing you with a binding written offer to purchase your property, now New Way Mortgage does not have to include your current monthly mortgage payment or taxes or insurance in your debt to income ratios. And New Way Mortgage can help you get a home equity line of credit so that you can tap into your home's current equity for your down payment, and that loan doesn't count in your debt to income ratio either. So this maximizes your buying power, it provides access to your equity for down payment, and makes it to where you can confidently go out into the market and write a non-contingent offer to purchase your next property and actually be in a position to compete and win. Then once you buy your property, you sell your previous home on the open market at whatever you can sell it for versus taking some lowball offer. And at that time, you pay a fee to Calc, which is really cheap compared to bridge loans. They only charge 1% of your sales price plus $2,000, which if you compare that to a bridge loan or like an offer you get from Open Door, it's literally like tens of thousands of dollars cheaper, and it provides a great solution for you. It keeps your real estate agent involved in the process, which means that you've got somebody in your corner working for you versus giving that up to work with Open Door or some other iBuyer. And this all makes it possible to bridge the gap between your current house and your next house. So if this sounds interesting to you and you want to learn more, click the link below to schedule a time to have a free consultation with one of my team members where they'll walk you through exactly how the trade-in mortgage works, and we'll give you all the information you need to make an educated home buying decision. I hope you got value out of this. If you did, do me a huge favor. Like, comment, subscribe. I'll see you on the next video.